Well, good morning, everybody. Welcome. So you have all seen the press release, I suppose. So I'll just give a quick overview and some highlights on key points as I see them. So let me say at the outset that all of the trade figures that I will be mentioning today will be in volume terms, except where I note otherwise. So let's start by looking at 2016. In last September, we issued an updated forecast warning that world trade in 2016 would grow at the slowest pace since the financial crisis, and this turned out to be accurate. The final figure for 2016 was 1.3%. That's below our revised estimate of 1.7%, which itself was already below the estimates of other institutions as well. So the poor performance over the year was largely due to a significant slowdown in emerging markets, where imports basically stagnated last year, barely growing in volume terms. In 2016, the dollar value of world merchandise trade fell for the second year in a row as exports dropped 3.3% to $15.46 trillion. That decline was less severe, of course, than in 2015, when trade fell 13.5% in value terms. Now, these movements, as you know, were due to major shifts in commodity prices and exchange rates, and those came mainly in 2015, but also some effects were still evident in 2016. So that's the picture for the past. Let's look a little bit forward. Let's turn then to the outlook for world trade in 2017 and beyond. A number of early indicators point to a recovery in trade growth in 2017. For example, container port throughput has climbed to a record high. Figures on global export orders are at their highest level in several years. And these factors, combined with an expected recovery in global GDP, give some cause for cautious optimism. The WTO, therefore, expects world trade to growth to rebound to 2.4% in 2017. However, because of the high level of economic and policy uncertainty, we are placing this figure, this 2.4 figure, within a range that goes from 1.8% to 3.6%. So, hitting that particular 2.4% forecast assumes that governments are going to pursue an appropriate mix of policies, and also that the GDP forecasts, which are done by other institutions, will be accurate. Now, a more pronounced improvement in economic circumstances would be required to push the trade growth towards the higher end of that range, towards the 3.6%. On the other hand, if we have unforeseen changes to monetary, to fiscal, to trade policies, all those could lead that number closer to the low end of the range. So looking ahead to 2018, we are forecasting trade growth between 2.1% and 4%. And again, this is subject to the same set of uncertainties. In recent years, we have been keeping a close eye on the ratio between trade expansion and global GDP growth. In 2016, that ratio fell to 0.6, and this is the first time that it has fallen below 1-to-1 since 2001. It is expected to recover partly in 2017, but our expectation is that it will remain well below post-war average, which is around 1.5 to 1. Overall, I think that while there are some reasons for cautious optimism, trade growth remains fragile, and there are considerable risks on the downside. And much of the uncertainty around the outlook is, of course, political, but not only geopolitical. Part of this is also people's concerns about the impact that trade can have. And the fact that trade plays a very beneficial role in the economy overall, it is, of course, a net positive. It drives growth, job creation, development, but nonetheless, people's concerns cannot be ignored. A net gain for the economy as a whole or to other individuals, it means little. It's no comfort to someone who has lost their job. So finding the right response to this means that we have to look at the whole picture. The fact that the economy is changing fast, driven by technology and innovation, is undeniable. 8 in 10 manufacturing jobs are lost to innovative technologies and higher productivity. It is today estimated, and this is an interesting number, that 65% of children that are entering primary school today will end up working in types of jobs that don't exist yet. So we have to adapt to this new reality, and that means applying the right mix of policies in a wide range of areas. At the domestic level, policies are needed to help support the workers of today and also to train the workers of tomorrow. Closing the borders to trade will only worsen the situation. It would not bring jobs back. It would just make more jobs disappear. So we need to keep using trade to deliver more benefits to more people. More trade integration can help make the system more inclusive, connecting new industries and smaller players to new markets. So we need to keep reforming the trading system in this direction, building on the success of recent years, such as the Trade Facilitation Agreement, the expansion of the ITA, the Information Technology Agreement, and also the elimination of agricultural export subsidies. So we also need to resist putting up new barriers. The global trading system was challenged by the financial crisis, and it passed the test. We did not see a significant rise in protectionism, and we certainly did not see a repeat of the 1930s. The share of world imports covered by import restrictive measures implemented since October 2008 and that are still in place is just about 5%. So of course could be even lower, but it shows that the WTO did its job. Now we need to keep strengthening the system, delivering new reforms, and resisting the erection of new barriers to trade. So as far as the members are concerned, I see a huge level of commitment here in Geneva to keep trying to advance and make improvements to the system. Ultimately, these factors are going to be key in the outlook for both trade and economic growth today and tomorrow. So that's it. Thank you very much. If you have any questions, I will be taking them over the next few minutes, I suppose. Yeah.
First question for Jamil Chada. Jamil, you have the floor.
Mr. Azevêdo, a question on the stagnation on imports that you mentioned, and more specifically on Brazil. The data show 3 years already of contraction in imports in Brazil. How would you qualify this? How would you explain the situation? Of course, recession probably played a big role, but how would that impact the local economy when you actually, when a country is actually not importing as much as you used to? Thank you.
Well, I think you pretty much answered the question yourself when you said that recession played a big role. Brazil's GDP contracted by 3.5% in 2016, and it is expected to bottom out in 2017, possibly around 0%, maybe a little bit more, we don't know. And clearly, that is going to be a major factor on how well the economy and the trade is going to behave in the future. Imports are very significant because once they begin to fall quickly, it is almost an advanced indicator of slower growth. So sometimes the drop in imports is celebrated in several places, but that's not actually good news most of the time. It simply means the economy is about to slow down. And we see that in many places. When you see a country in a dynamic mode, expanding quickly, imports go up. The moment that the expansion slows down, imports tend to go down as well. So it's a leading indicator most of the times. I suppose that a lot of what happens for the trade in Brazil, will depend significantly on GDP, on the behavior of the GDP.
Next question for Jamie, please.
Good morning, Mr. Azevêdo. Can you hear me? I'm right here, straight ahead. Jamie from Associated Press. You mentioned policy uncertainty presents the risk. Could you unravel that for us a little bit? I'm specifically thinking about how much does the Trump administration's policies account for that policy uncertainty you're talking about? And we have all been asking you for weeks, if not months, about the clarity that you have gotten from the U.S. administration about its policies toward the WTO. Can you bring us up to date about what you've heard from them about their willingness to engage with the WTO and continue to support trade?
On the second part of your question, I don't have much to add to what I already said. In short, we are waiting to see the new trade team really in place, waiting for the new USTR to be confirmed so that we can have a more meaningful dialogue. At this point in time, we don't have that, and we're still waiting to see how the trade policy itself is going to shape up in the United States. As far as the first part of the question goes, it's interesting that preparing for this conversation of ours, I asked the economist precisely that question. How do you measure up that uncertainty? How do you quantify that? Where does it come from? And it's not an easy answer, but I have to tell you, if you look on page 12 of the press report, there is a graph there, which is global policy uncertainty from 2014 to February 2017. If you look at that graph, you see that the graph is going up markedly, particularly since 2016. Now, that graph, I asked, what does it mean? How does that, and it's a bunch of not very numerical elements that go into that graph, but a lot of it has to do with an analysis of your articles, articles by the press, where the word uncertainty or where the piece itself is about question marks on the future of fiscal policy, of monetary policy, of trade policies. All those things combined show in that graph that that level of uncertainty is going up for a number of reasons: elections, volatility in financial markets, question marks about the future of fiscal policy and monetary policy in major markets. All those things are going up, and clearly that doesn't mean that it's all negative. Okay, so an uncertainty can be a good uncertainty because you're expecting, for example, investors are expecting interest rates to go down. That's a good for them, but it simply means that they will hold their investment until that uncertainty is cleared up, until the policy is put into place. So investors in general, they hold back in scenarios of uncertainty, either because it's turning in a bad direction and therefore they're holding back their investments, or because it's in a good one and they're waiting for the good conditions to materialize before they make the investments. So this is about stability. What we need today is stability. What we need today is predictability. And that's what helps fulfill the projections significantly. The more instability, the more unpredictability, be it for good or for bad, that doesn't help the numbers for economic growth and trade expansion.
Questions? Yes, please.
Christiane Oehlrich, German press agency. Can you hear me? You just managed to answer a question on the Trump policies without ever mentioning the US and Trump. I'd just like to try again. Could you tell us what the impact of what we've heard out of the Trump administration on tariffs, on trade barriers, how that informs your forecast and how that increases the risks?
I heard a number of comments on the part of authorities connected to the new administration. Some going in a particular direction, others going in a slightly different direction. I think as far as trade is concerned, as far as the WTO is concerned, I have said this before, the devil is in the detail. Just an overall statement of intentions to go in one particular way or another, it doesn't tell us what the trade policy is, and it doesn't tell us what the impact of that trade policy will be on trade relations among WTO members. So we need more details, we need more clarity, and I suppose that will come when we have the new trade team in place. We don't have that now, so anything I say about the impact of the U.S. trade policy would be speculation, and I'm not keen on speculating.
La prochaine question est pour Maureen Noël. Vous avez la parole.
Oui, en français, s'il vous plaît. Bonjour, je suis de l'agence France Presse et je voulais savoir de quelle manière observe l'OMC les élections en France, la présidentielle et les législatives. Est-ce que vous avez réfléchi aux différents scénarios? Est-ce qu'il y a un candidat qui vous plaît plus que l'autre sur le plan du commerce?
What is important is who the French people want, not who I like. So let's wait and see the word from the streets when the outcome of the elections are out. Let me just say this, as far as elections are concerned, they are clearly part of that graph that I showed you on page 12. Whenever you have elections and you have potential outcomes and directions of policy, economic policy, fiscal policy, monetary policy, trade policy, all those things rise in terms of uncertainty. It can be good uncertainty. People are expecting then the economy to pick up. It can be bad uncertainty. Uncertainty, no matter what the direction, has a freezing effect on investments and therefore on economic growth and economic output. So I think getting over the election cycles is important, particularly in the major economies, so that we have a clearer view of what is coming, what the policies are, and that we have more predictability. Predictability is extremely important for economic growth and for investments.
John Zarkostas, please. John.
Yes, good morning, Mr. Azevêdo. I was wondering, sir, do you think one possibility could be member states going back to an old toolbox and practicing voluntary export restraints as we saw the Chinese practice it in 2005 to 2007 when they had problems with the United States and Europe concerning certain product categories?
I don't have any indications in that direction. But what I have been consistently saying is that the WTO has, in the rules and the disciplines that have been agreed by all WTO members, a number of tools that allows them to handle concerns that they have with the situation in trade markets. So we have the possibility of incentives, which are there, with limitations, of course, but they are there. You have trade remedies, which are possible to be implemented in case of practice by companies, the private sector, therefore anti-dumping practices, countervailing duties that will address distortions introduced by governments. And you have even safeguards, which allow members to handle the situations where it's not even unfair trade practices. It's just a surge in imports of an unexpected kind that is threatening the industry. So there are a number of tools, and I mentioned just a few. There are many more in the books, and they are there to be used. As long as members comply with the requirements that are in the rules, there is a number of tools that can be used, and my hope is that members, all of them, will be using the tools. If they need to use it, they use the tools that we have in the disciplines.
If I may have a follow-up, do you expect a proliferation in voluntary export restraints, and would that be backsliding on the Uruguay round achievements, which were meant to put the voluntary export restraints in the cupboard?
I answered that question already. I said I have no indications of that. I repeat my answer.
Next question for Ravi, please. Ravi, you have the floor.
Sorry, I came late. I couldn't follow much, but I'm just following up from the question my colleague asked about Trump. Months before the Brexit happened, we heard and we saw your comments that Brexit is going to be bad to Britain, when the decision was quite not decided, and when everybody thought the referendum would actually go for the yes vote to remain in Britain. But when it comes to United States, your positions are somewhat ambiguous in the sense that you say details have not emerged, whole picture, some statements and here and there have come. Why are these kind of double standards? When it comes to US, you tend to be extremely cautious and soft, and when even when the result of Brexit was not known, you already pronounced your view on it.
My standard is very clear, is the way I see it. That's the only standard that I apply. And I don't take back anything that I said about Brexit, and I don't take back anything that I said about the new administration in the United States. On Brexit, I said at the time that, I don't remember exactly the words, but what I said at the time is that uncertainty is bad. And I just said that today, again. Uncertainty is bad. That's what I said at the time, and I keep repeating it now. Now it's done. It's been decided by the British people. Now, I have said before, and I will say it again, the less turbulence we have in this process, the better for the global economy. And as far as the WTO is concerned, we'll try to ensure, as much as we can, less turbulence. On the U.S., there is no ambiguity in what I said at all. I said it before, and I will say it again. I don't have an interlocutor in the U.S. I don't know what the trade policy is. And I haven't read any piece in the press or analysts or economists or politicians telling me what the U.S. trade policy is. I just don't know, and I don't think anybody does at this point in time. So we have to be patient, and we have to see what the trade policy is.
Questions? No? Okay, thank you very, oh, sorry. Yes, please, ma'am, you have the floor.
Hi, this is Angela from Sina, China. I have only one question about the Chinese economy because all the trade? Because I saw in the press release, the investment accounts for more than half of China's GDP growth in 2012 to 2013, but in the 2016, last year, it had fallen to 39%. So do you think the percentage will keep falling in the following years? Thank you.
Well, I think a lot of that depends on forecasts for the Bob, maybe you can answer that. Yeah.
So China has a goal, China 2030, which is to rebalance its economy away from manufacturing and investment towards consumption and services-led growth. China seems on path towards that rebalancing. So one expects, looking into the future, that investment growth in China will continue to decline as a share of GDP.
Anything more? Okay, thank you very much, everybody. Have a good afternoon. Bye-bye.